Welcome back to another weekly episode, guys. So in this particular episode, we look into the IT sector currently and how you should be handling what is happening in the IT sector. I'd alerted you about IT and metals as a space that you should begin looking at. And while the time is still not ripe yet, that is for IT sector, I'll show you the kind of things you have to keep in mind and how you should be moving forward and selecting some stocks for it. There are a couple of things that I'll speak about right away. Number one, once a sector starts moving, that move generally lasts for many months. So don't get in this desperate mindset of immediately trying to buy whatever you're seeing on the screen. It will take a lot of time for the sector to move. Number two, over the weekend, obviously you will go through a lot of content on IT because typically what happens, whichever sector does well, that is when you get flood of tweets and YouTube videos and those kind of things. So be mindful of the extreme short-term kind of movement in IT sector. Whatever I speak about on this channel is something that will play out over a period of time. So if you're here for some short-term kind of trading tips or those kind of things, this channel is not for you, and neither this video is for you. It'll pay you much rich dividends if you try and focus on little longer term. So the first thing that I've pulled out, if you've finished Stan Weinstein's book, is classic Stan Weinstein's chart, which is nothing but simple candlesticks, which is a 30 weekly moving average. That is a simple moving average on a weekly time frame chart, and here you see relative strength against Nifty. So what you can see here, as Nifty IT is attempting to move up today, it is up 3.5 or 4%. The relative strength line is still languishing at multi-year lows. What does it tell you? It tells you that if there is some long-term sectoral improvement that is going to happen in IT, it will happen over a period of time. It is just that you got to start doing the homework today. There are two segments in IT sector currently. Number one is the traditional IT companies that everybody knows about, and number two, the AI space in IT. AI theme is going to be big in years to come, and there are some specific IT companies that cater to AI theme. It's not that difficult to find out. Just Google about artificial intelligence India IT companies. You'll get a companies out there, a list of companies out there that are currently catering to IT services, specializing in artificial intelligence. So this is still at a baby steps kind of phase in India. AI part of IT is set to grow in years to come. So it's not that difficult. Today I'll cover up some companies that is from the traditional spaces. The AI space currently has run up a bit. So whenever the time comes, whenever the stocks are pulling back, that is when I'll give you some hints about which AI stocks to look at. There is one more reason. Currently I'm building positions in the AI space, so I don't want to do a video on it. It's a conflict of interest also, some regulation guidelines I have to follow, but I'm giving you a major hint. Look into the AI space. A lot of companies are breaking out. Go and look deep into what those companies do. So first thing, IT sector still as an index is in a stage 1 structure. Stage 1 structure is basically this horizontal sort of structure that you see here. When Nifty IT moves above something like 32,000, that is when it becomes in a higher high structure. So I hope you can see why you're not at all late in terms of trying to explore what is going on in this sector. So I'll just move forward to the next slide. Now I'll pull out a paragraph that I showed you in the month of March when the markets were attempting to bottom out. That time obviously even I did not know the bottom is getting formed, but as evidence came forward in months to come, that is when you realize that possibly a strong bottom has formed in the market. The key to trading breakout is to determine the probability of a sustained advance versus just a short-term rally that fizzles out. The first thing I would like to see after a breakout from a base is multiple days of follow-through. The more the better. The best trades emerge and rally for several days on increased volume. This is how you differentiate institutional buying from retail buying. Why I'm pulling out this chart for you? Because whenever IT moves into stage 2 above 32,000, then you need to carefully see whether there is follow-through buying happening or not. Whether more number of days, the index is heading higher or not. Whether you're seeing more and more stocks breaking out in a similar fashion. By the way, look at this structure, memorize it. There are some stocks that are already breaking out. Pay attention to those stocks. I'll come to that also. So this chart that you see is of Coforge. All right. So Coforge actually came on my radar about a month back. But understand what I'm writing here. So point one, this is just a note I'm sharing. Point one is the series of wide range candles that are backed by volume. So these candles that you see, all these are candles that are expanding on range, and then you're seeing movement happening on the upside. Point two is a sharp pullback. All right. But look at the drop in volumes. Look at the drop in volumes as this pullback is happening. And then point three and point four are continuation confirmation structures on the chart. Read my last remark, which is important. Sector support is still missing, which means a lot of stocks are still not breaking out clean in IT sector. Earnings are also around the corner. In such phases, typically, I reduce my position size. Why I reduce my position size is because, let's say hypothetically I'm going behind some stock. I like to buy 30% position in such scenarios when sector is not in a clear high structure, and I like to sit. I like to review. I like to learn more about that particular stock that is something I'm attempting to buy, and then gradually over a period of time I build positions. Remember, if the structure of IT sector is right, if this structure is moving above 32,000 and heading to 40, 45 or 50,000, it is not going to happen tomorrow. It's going to happen over a period of time. And there are always some fundamental catalysts out there for a sector to start performing. For those of you who have been here in this channel for the last 3-4 years, in the 2020 bull run, I had done a video on IT sector, I think in the month of June or July, as to why you should be looking into IT sector. The fundamental catalyst there was that there had to be massive margin expansion, or IT sector margins P was going to expand. The title of the video was why IT sector is going to see P expansion, price to earnings ratio expansion, because of the work from home culture that was coming, and the massive amount of cost cutting that was going on, that would obviously boost IT results. The catalyst now, if this structure were to play out, remember the structure is still not there. It has to move above 32,000. Then you need to see a lot of follow through buying happening. Only then the structure will be valid for IT sector. In this particular scenario, there is one more fundamental data point that is playing out, and that is artificial intelligence. See, artificial intelligence is going to change a lot of sectors in months to come, or rather in years to come. It's not just IT. Today, because I'm speaking about IT sector, I'll tell you that yes, in years to come, a lot of things will be automated in IT industry. Now, I'm someone who does not know a lot of coding. I'm good at basic things, but I don't know in-depth kind of coding. But today, using Chat GPT, I can code a lot of things that would usually require me hiring few people. Now, this has a message here. The message here is that, when it comes to testing, when it comes to project deployment or all those kind of things, a lot of things are going to be taken over by artificial intelligence, which means the margins, the profitability margin, the operating profit margins of this sector is going to grow leaps and bounds in years to come. Again, please listen to my remark again. It is not about next quarter. It is not about 3 quarters down the line. It is about 2 to 3 years, if this structure first works out. All right. A lot of changes are coming in the IT industry. So that is the fundamental catalyst which will take time to come. And as I said, Indian AI industry is just taking its baby steps. It's just at that initial stages. Now, why I showed this chart to you? I showed this chart to you for you to focus on point number 2. That is sharp pullback, but look at drop in volumes. I'll again take you back to a slide I shared with you in the month of March, April. That is the teachings of Mark Minervini. And this is also taught by Stan Weinstein. That is, you need to hold tennis balls and sell eggs. Tennis ball is something that you throw, it is going to bounce back. Egg is something if you throw, it's never going to bounce back, right? Once a stock moves through a proper pivot point and triggers my buy price, I watch the stock very closely to see how it acts. Determining whether the stock is a tennis ball or an egg will tell you whether you should continue holding it or not. What is tennis ball? Tennis ball is when stock pulls back but does the right things. What is right thing? Right thing is when the stock moves lower but the volume contracts, because this tells you that whoever institution that is, they build positions here, they're not getting shaken out by this structure here, and then invariably you will see a massive bounce coming in the market. So tennis ball action will generally occur after 2 to 5 days or even 1 to 2 weeks of pullback, followed by the stock bouncing back up again, taking out the most recent highs. Volumes should contract during the pullback and then expand as the stock moves back into new highs. This is how you determine whether the stock is experiencing a natural reaction or abnormal activity that should raise concern. Stocks under strong institutional accumulation almost always find support during the first few pullbacks over the course of several days to a couple of weeks after emerging from a sound structure. I link it up with current stocks. Minor reactions of pullback in price are natural and are bound to occur as the price advance runs its course. Sometimes the general market experiences a sharp decline just as the stock is emerging from a base. The important point why I showed this thing to you here is something that I'll explain a couple of charts down the line. Now there are two kind of structures you need to first see in the IT sector. The first structure is what stocks like Coforge are doing. They're breaking out before IT sector is breaking out here. All right, stocks that break out earlier are leaders. Now this particular chart that I share, I think this chart is from Tech Mahindra, I think Tech M. All right, again look at what Tech M is doing. Horizontal stage, it is breaking out above that particular stage before the IT index. All right, before the IT index it is breaking out. Now I can make a disclaimer out here that in my account I have no positions in Tech Mahindra. That is why I've just taken the name. I'm just explaining the structures here, which stocks you need to buy, what you need to go behind. That is something you have to decide. Look at my remarks here. This quarter, this I had made a couple of days back. This quarter should mark the end of IT correction, underperformance that is, especially large caps. A lot of mid and small cap stocks are already breaking out and doing very well. Within large cap, in the very short term, let's not get into the names. My sector preference is limited for the next quarter, that is the current quarter. My sector preference is banks, metal and IT. These are my top three preference, followed by, if I get something in consumption, FMCG or autos. Why? Because if you're watching my videos in sequence, these last three sectors are the ones that have taken the market higher. Every quarter, same sectors cannot keep doing well. That is not how stock market functions. So my sector preference would be banks, metal and IT. Metal also, I had alerted you, metal has moved before IT. A lot of names in metal sector have already started moving up. I hope you've paid attention. Banks have still not moved up. It's only a matter of time. All right. So again, but look at this structure. This structure is a stock that is breaking out before the sector. Now this stock is not going to the moon tomorrow. So there is a lot of time. Look at the fundamentals. Look at basic things I've taught you. What is the sales? What is operating profit margin? Are they expanding? What about Tech Mahindra and artificial intelligence? What about Coforge and artificial intelligence? Google, ask ChatGPT about it. You'll get some answers. That is how you need to research on your own. Now this is Mastic. Now, is this structure a great structure to go behind? See, there are a couple of things you got to note here. Here, there is a stage that is formed below the 30 weekly moving average. I generally don't like those structures. I like structures that are clearly, whipsawing in and around 30 weekly moving average and then breaking out. So again, read my remarks. IT sector is up today. You'll be hearing a lot of things over the weekend. Here's how you should simplify. The sector is in stage 1 still. This means you'll have a lot of time. Be patient, but start doing your homework today. Take note of which stocks that are getting into stage 2. That is just a couple of examples that I shared. A lot of other stocks are also doing this. So don't go by the name. Go by what structures you need to track on the chart. Also take note of which stocks have rocketed higher in the last 2 months. So this line that I have written, momentum play, this is mainly those stocks that also have a lot of exposure or are investing a lot of money in the current hot space, global hot space, which is the AI theme. I purposely don't want to go in the AI theme today because again, I've already made a disclosure. I'm building positions, so it won't be appropriate and ethical for me to discuss those names. All right. Point 3, stocks where you need to look forward are the stocks where tennis ball action plays out. Tennis ball action is nothing but stocks moving up, then retracing back on lower volumes, and then you see stocks again moving higher. I'll just take you back through that structure again. Yeah. So this particular structure, when the pullback happens, volumes have to contract. This is classic tennis ball action in stock market. Now coming back to the structure of Mastech. If you see, Mastech structure is a bit different from Tech Mahindra. Here the stage is getting formed right at 30 weekly moving average, then a breakout. So this is a preferred structure that Stan Weinstein teaches, and I follow the teachings of Stan Weinstein. If you look at this chart that is of Mastech, this is still fine. Although I would have preferred the consolidation to happen right around 30 weekly moving averages. This is still a fine structure. If you find such structures, you can go behind it. But the structures that you need to strictly avoid are structures that something like Emphasis is forming. That is, this is a nothing kind of structure. There is no stage out here. For Emphasis to qualify also, it needs to move beyond 2300 or maybe even 2450. So this is a kind of stock or a structure that I will strictly avoid in current times. I want a proper stage consolidation, and then I want a clean breakout happening in a stock. Read my last remark here. Remember, sector trend takes time to mature. There'll be plenty of opportunities. Haste will always make waste, right? So you've got to understand the entire psychology of how a sector moves in the market. Now, you know why that is important? It is important because at all times, we are always eager to go behind what is currently moving in the market. Oh, this stock is breaking on, let me see and get in so that I do not miss out on the next 10%. The short-term jumping, the short-term trading, the short-term kind of things that you keep doing, this is precisely why you will never grow beyond a point. Learn to hold stocks that are going to move up 200, 300% in the next 18, 24 months, as opposed to getting in today and going out tomorrow for 10, 12%. This is speculation. Extreme short-term is speculation, and that is something I just discourage always. You know, I'm currently doing an exercise on this channel. Obviously, after the results come out, I'll share whatever has happened. One of the metal stocks, you know, I've picked up, and day by day I explain what is going on in that metal stock counter. Now, what I'm doing myself in that counter, that is something obviously I don't disclose for regulation reasons. I might not have any position also, but I'm showing the importance of this last line, that always trend will take time to mature. This is not a short-term game. It's a game that is played on probabilities. It's a game that is played with patience. It is a game that requires conviction. So when that trade gets over, I'll explain what has been done and how, using simple things, by connecting simple dots, you get the answers to a lot of things. But keep your watch list limited. If today you are focusing on IT sector based on the structures that I'm teaching you, the structures of Mastech is valid, the structure of Coforge is valid, the structure of Tech Mahindra is valid. But what you need to avoid are such structures. Now, such structures are structures where, you know, there is no proper stage formation. Again, if you don't understand what stage means, go through Stan Weinstein's book. He has just written one book, and you'll learn a lot. The actual tricky part of this week was actually yesterday, that is Thursday, when the markets were just falling, and you know, a lot of shakeout was playing out in the market. Read my comment here, because again and again I teach you also on the open channel, your portfolio is your biggest indicator. Don't go by Nifty Bank always. Never forget, my remarks were, never forget that 90% of bearishness that you see in bull market is a result of your bias and nothing else. There's a difference between seeing weakness on the charts and in imagining XYZ scenarios in your mind. Best traders know how to live in the now. Now means present, not thinking about tomorrow. No SGX, no gift Nifty, and nothing is required. They don't assume anything. They think less, they react more. In stock market, money is not in the prediction. Money is in your reaction to what the screen suggests. You know why I made this post? I made this post not to put anybody down, or you are seeing a lot of bearish opinion in the market on social media also, which is fine. Everybody can have an opinion. But my post is about trading psychology. My post is about investment psychology. A lot of times, whatever you're imagining, it is only in your mind. It is not there on the chart. Then you find data points to fit that opinion. That is a huge mistake in the market. And before I end this video, I'll just put out one important point. For you to go from 0 to 100, you should know how to navigate phases where market moves from 0 to 30, then pulls back to 15, cuts out a lot of people, Again, from 15 to 25, it will move, form a range, then 25 to 45, then back to 25, then 60, then back to 45. That is how trends work in the market. Whatever you see in textbooks or in hindsight charts, it's all hindsight. And that is why, I come back to this point where, the sector trend or a stock trend takes time to mature. So do your exercise. IT is still not in a stage 2 structure. Take note of which stocks that are breaking out into stage 2 structure. Do some basic fundamental analysis. I've done all this, many a times. Look at the sales, look at the operating profit margins, look at the, revenue growth that is happening, and check which companies are growing at a healthy rate without much debt. There is nothing more that you have to do. Rest, stock structures, chart structures, these will take care of you, provided you have the ability to not exit positions when days like yesterday play out. So I hope this was again informative. The AI part, I'll cover it sometime later, just to make sure I'm not caught on the wrong side in terms of discussing names in real time. So have a great weekend ahead, guys. Take care, be safe, and make sure you do your homework about the IT sector. IT sector will move, but it is going to take some time before the structures get into the right kind of patterns that Stan Weinstein has taught. So have a great weekend ahead. Take care.